Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, December 13th, and we are coming off of a pretty solid and large news event this morning, which was CPI. If you read the Trade the Chain newsletter or you were in the Trade the Chain community, we had a lot of updates in relation to, the CPI outlook and what we predicted to happen with price action, as well as, just generally what we predicted inflation to be in general. It was a beat. So as you can see here, if you read the Trade the Chain newsletter, have been following our daily show, we discussed the desire for CPI to come down, both from an economic standpoint as well as a market standpoint. And CPI came in 0.1% month over month, under 0.3%. Core CPI came in at 0.2% month over month, under 0.3%. And then same for year over year, 7.1 compared to 7.3 for CPI, and 6.0 compared to 6.1 for core CPI. So obviously this was positive. Inflation is lowering, but it is still high. It's still 7%, where the desired number is 2. So it's come off the highs, close to 9%. Obviously a good sign, and core CPI seems to have double tops if you saw the Trade the Chain newsletter. So it does look like CPI is coming down, but we still have other worries in front of us. Oil and gas will likely get more expensive. Keystone is currently paused. Russia is continually playing oil and gas games. So we are heading into the winter. We are not out of the weeds yet, and we have FOMC tomorrow. We have the federal funds rate announcement at 2 p.m., and then we have the news conference at 2:30 p.m. If you read the Trade the Chain newsletter, you know that typically we see a one direction movement on the rate hike announcement. Previously, it's been positive because typically when it comes in as expected, the market reacts positively. And then when Jerome Powell speaks 30 minutes later, the market reverses and will react negatively. Typically because he is, putting his foot down continually in reference to the Fed's job to dampen inflation and work on the health of the job market. So that's what we're currently looking at right now as the big news event tomorrow. Interestingly enough, equities have already sold off their entire pump. The CPI pump. So CPI was released at 5:30 my time, so 8:30 Eastern. This is 5 a.m. Pacific. You can see the large pump, and then as soon as we hit 6 a.m., 9 a.m. Eastern, we started to sell off, and we are now underneath where we opened at 5 a.m., 8 a.m. Eastern time. So very interesting there, and the fact that I'll go to the 4-hour here. And the fact that we lifted higher, close to my resistance level at 4160, looks like 4140 was the number, but we are now back in the range. And being back in the range is not positive. That shows deviation. Typically that's kind of a top signal. You could definitely draw a potential double top here as well, with deviation above it twice. So, not very positive for the equities outlook. Interestingly enough, just for reference, for the last FOMC meeting, this arrow was when FOMC, when they made the rate hike announcement in I think the 3rd or 4th of November. We rose about 6.5% on that news into the weekend, and then we trickled off over the weekend and had a massive sell-off to start on Monday going into Wednesday. That is a 27% drop. So what we saw was a 75 basis point hike. The Wall Street Journal telegraphed it early, and so it was as expected. And then we sold off after Jerome Powell gave us his outlook. And this is likely to occur again due to the fact that the Wall Street Journal, again, Nick Tamiros, who correctly has telegraphed the last several FOMC rate hike announcements, has said that to anticipate a 50 basis point hike, which is in line with expectations. This is what the market has been expecting. So it would not shock me to see something similar to this, although we do have, a much steeper sell-off that I didn't really much expect. If we can close above, 4,000, really where we're at now, 4,005, then there's still definitely a chance to continue higher, but it's not looking very positive for equities right now. So if we're thinking about equities in relation to everything else, basically, first stand, you want to close above 405, which is the open for the previous 4-hour candle. You definitely want to stay above 385, 386. That is support for the top of the range. And then, of course, if you break beneath the 3986 level, then you're back to confluence with both the trend that's been standing since early October, and also the 200-day moving average. So I would expect us to hover at least in this range, if not somewhere in this range, heading into FOMC. So if that's the case, if we're hovering around here, then we could have one more pop. Let's say we're down here or we're up here. We have one more pop back to the highs, and then you really start to sell off. It already looks like it's starting to form a top formation. You have, just for general movement, you've got basically this big old megaphone channel, and typically the megaphone channel will bounce around until it breaks down or up, and typically it will continue the momentum of the previous movement, which was obviously down. We've kind of had a very large bear market rally, and of course we talked about that 4140 4160 level a lot. I've had this line drawn for quite some time, and so we finally tagged it. Strong rejection back beneath the range. My opinion would be one last attempt before failure. So maybe very much something like this, or maybe we start lower and do that, or maybe we just do this. And, for basically going into 2023, we're kind of flat, and then we start to trickle off at the beginning of the year. That's entirely plausible as well. But it looks to me like it is, it was growth. Now we're consolidating. After consolidation without any major macro catalysts means typically continued consolidation until a catalyst or a slow siphoning of liquidity from the market as risk takers remove their risk and set up new trades. So that's the current outlook for equities. Looking at crypto, we can see Bitcoin daily sentiment is bearish, not very positive there. We had that slight lift yesterday. It's still bearish. CPI lift, of course, was a good catalyst, and we saw hourly sentiment pop up. Why is this not going? There we go. We saw hourly sentiment start to pop up around CPI into CPI. Now it's starting to trickle down, and we're seeing very similar for ETH. 7-day sentiment not looking hot. We had a nice spike during CPI. Now not so much. So not very positive for ETH and Bitcoin heading into FOMC. Looking at DXY, just carefully, just because I skipped over that for equities, we are at support that I drew quite a while ago. We've continually got what appears to be potential bullish divergence, but looking at that RSI trend, it's either going to break above this RSI trend or continue to get rejected below. If it gets rejected below, if DXY continues lower, and I'll draw the next support area that I like, which is right here, right around 101. If it gets rejected, then it's probably headed to 101. If it breaks the RSI trend, it'll probably at least head back to 105, flip that, and head higher. So still no real zone for DXY, but it is in a position where it could help revert equities, or risk markets, I should say, greatly. And it's not looking very positive, but in the history of what we've been dealing with, DXY in this position typically ends up popping back out. So we will have to see how that looks. Let's look at the 4-hour really quick. Holding support pretty well. Doesn't mean it will continue, but I would expect at least some sort of maybe revert back to mean. Maybe something 104, 105. I mean 104.8, 105, something like that before another decision zone. So definitely not looking good for risk, at least in the immediate short term, 4 to 12 hours. Looking at Bitcoin, 1-hour charts, We discussed, potentially popping up and high, and we said if CPI was bullish, we would see another potential 4 to 5% candle. CPI, I guess, the pre-CPI, the total CPI pump was about 5%. The actual CPI pump when CPI was released was about 3%. So Bitcoin completed its pump. That we've had this trend at 18K for quite some time. We finally hit it. I've got another one at 18.5, and I think that's definitely plausible. Definitely speaking on the equities, if we get that pop on the 70 or on the 50 basis point hike announcement tomorrow, it would make a lot of sense to me to trickle back down to at least the VWAP at 17.5, maybe 17.4, kind of like equities have done. Pop back up to 18K, maybe 18.5 on a big kind of deviation, and then we sell off into mid-December after the FOMC hike, very similarly to what we did here. So you can definitely see how that would make sense based on precedent. Had a nice little pump, we sell off, we pump again on the good news, and then we end up selling off again. It's entirely possible that this was just too much pump and we just end up selling off with potentially small margin. We could definitely not even make it to 18.5. Maybe we get back down to 17.5, 17.4, and we pop again to 18, we get rejected. But definitely be aware that any deviation up here, especially if it makes it back under 18K, is a fantastic short opportunity, as anytime you deviate and head back into the range, confirm into the range, you're typically headed for the bottom of the range. So that would be a good short opportunity at that point. Very similar outlook for ETH, obviously selling off much quicker than Bitcoin is in relation to the CPI pump, looking a little bit more closer to equities than Bitcoin, and Ethereum has been a lot more volatile. So, very easy to park this out. We've got 1305 here as support, probably pop back up there. If it can hold 1305, obviously, I assume by the time it gets down there, the VWAP will probably meet with it, but the VWAP will be very important as well as with this support line. So maybe we drop down in the VWAP, maybe we pop back up. But of course, if the VWAP and or 1305 can't hold, then we're definitely headed back towards 1280. And then 1280, what am I doing here? And then 1280 would be a really good bounce opportunity. I think you probably see RSI, somewhere around here by the time that happens, and especially around FOMC. Especially if we get as expected, that's probably going to be a bullish catalyst. Of course, I could be completely wrong here. 75 or 50 basis point hike could be completely taken the wrong way. I'm just basing this off precedent of how the market has reacted upon getting the rate hike that they expect on the day that they expect. So 1305 or the VWAP, that's got to hold to head back towards 1350. Else 1280 would be another good support angle. And in that case, I think if it drops that low, then this would be the top level for resistance on a future move. And then of course, very similarly to Bitcoin, we probably wouldn't get very far above that 18K number. So that's the current crypto outlook. Of course, FOMC, biggest news event. Just to summarize again, we typically see a bullish pop upon getting what we expect. If we don't get what we expect, if we get 75 basis point hike, expect full nuke. If we get 25 basis point hike, expect big bullishness. If we get 50 basis point hike, I'm expecting some topsy-turviness, immediate positive reaction. Jerome Powell comes in, tells us everything is not okay, still have a lot of work to do, and then the markets head back lower. If markets really end up taking what he says to heart, I would not be afraid of at least the 200-day moving average, which would be 38.50. And that's, I guess let's check out the 4-hour 200-day moving average. At least the 200-day moving average in the 4-hour, which is 39.50. And then I would say very likely one of these POCs down here. Look at this massive liquidity gap here. There's a lot more interest between 3,600 and 3,800. So my first target would be, especially if 39.50 broke, 37.60 would be my first target, and then 37.30. These two POCs would be very positive for some sort of reaction. Looking at Bitcoin, let's turn. Well, for some reason my VRVP does not want to cooperate. Let's see if this works. There we go. So we can see that there's more liquidity, much more liquidity than up here around 17.2K for Bitcoin. And then we have a lot of liquidity at 17 flat. And if we lose 17 flat, then 16.8 is the last hope before we start praying that some liquidity comes in around 16.5. For ETH, the levels are, let's get everything. For ETH, the biggest level of interest right now is 1278, about 1280, which you mentioned before, all the way down to 1250. Those are very strong right now. And of course, if those broke, then you're looking at 1210, 1200, something like that. So, basically mid-range, lower end of the range potential. And this could be a potential deviation because we have this support level based on this trading range and that trading range. And if we dip to 1208, we're deviating under that range, we could potentially pop back up. Doesn't mean it's guaranteed, just something to look for at that level if you're trading level to level. So good luck, happy trading. Absolutely insane week. Congrats to those who successfully long CPI. Definitely felt that way. Nick Tamiros is telling us what's going to happen tomorrow. We're going to try to trade it based on what has happened prior, but just know that nothing ever trades to perfection. We are just using precedent and history to our advantage here. We might not get what we expect. We may get what we expect. If we get what we expect, we trade the plan. And we know the levels that we need to look out for. In the meantime, for intermediate bearish or bullishness, right now equities are still trying to sell off, but hovering right around that 39.90 number that we outlined. It is below the close that we wanted. Let's check this out really quick just before I close. So we wanted it to close above 4,005. It's now under 4K and selling off. It is now at that support level that we lined out at 39.90, 39.88. And it looking more likely like 39.30, 39.40 may get tagged in the near future. So good luck, happy trading. Going to be a fun day tomorrow. Fortunately, the FOMC announcement's at 2 p.m. Eastern, not so early. So you have a full morning of trading and volatility to lead up into the announcement. And then, of course, all the fireworks will come towards the end of the trading day. So good luck, happy trading. See you all in the Trade the Chain community.